Hello and welcome to Markets Daily. My name is Zohaib Fazal, and over the next few minutes, we are going to talk about how the Indian markets perform today and what can we expect from the markets in tomorrow's session. Indian markets open gap up as expected by GIFT Nifty. In fact, there was a strong news on HDFC Bank, and the HDFC Bank ADR was up by about 5% in US markets, and that resulted in a lot of people expecting that the HDFC Bank will also open gap up at about 5%, but it opened gap up at 3%, and after that it was consolidating for the entire day. Because of this, Bank Nifty opened about 500 points on the higher side, and within the first 30 minutes, it shot up by another 600 points, taking it closer to about 1200 points on the higher side. Close to about 53,200, and after that, it was consolidating in a range. Nifty also opened gap up, but again, Nifty was in a range right from the start of the markets, but the range in Nifty was far more volatile when compared to Bank Nifty. In fact, considering that Bank Nifty was having an expiry today, the kind of calmness that we saw in Bank Nifty was quite good to watch. Which there were no sharp up moves or down moves after I think about half an hour from the start of today's session. If you look at the performance of the markets, Bank Nifty closed about 950 points on the higher side, which is about it closed about close to 53,000 on close to 53,000, and Nifty was higher by about about 150 160 points, which is about 0.7%. In fact, this entire gain today in Nifty has come because of Bank Nifty. Reliance, TCS, some of these marquee stocks have underperformed, and if Bank Nifty would not have shown such strong performance, Nifty would have closed flat for today's session. In terms of institutional data, the FIIs have sold stocks worth about 4,500 crores, while DIIs have bought stocks worth close to about 1,000 crores, taking the net institutional sell figure at 3,500 crores. That means that a lot of retail buying has happened in today's session. On the options data front, there is a lot of bullishness that is seen by option writers. They have written puts aggressively right from 24,000 to 24,300. In fact, all the levels 24,100, 24,100, 24,200, 24,300, all these levels have seen strong put writing, while there was call writing seen at 24,400 and 24,500 odd levels. Now, considering all the data from today's session and how the markets have performed, the expectation for tomorrow's session is going to be more of a consolidation one. In fact, if someone wants to undertake positions, it's always good to buy on dips rather than sell, on rise strategy that needs to be adopted. Markets are in a strong bullish zone, and shorting these markets may not give you a lot of good result. In fact, the risk to reward ratio on shorting the markets is far higher. There is a lot of risk, in shorting the markets when compared to going long, or finding long opportunities. And if you get Nifty, close to about 24,200 to 24,250 odd levels, you can go long for tomorrow. And the target should be about close to 24,350 to 24,400 odd levels, where Nifty should see some sort of resistance, while stop loss needs to be maintained strong at 24,150 odd levels. Because we have seen a lot of bullishness in the markets, there is a very high likelihood that there can be profit booking in this market that can lead to 200 to 300 points on the downside in Nifty, and that's the reason that it's always good to maintain a stop loss in such kind of a market, and 24,150 should be the stop loss if you're initiating longs at about 24,200 to 24,250 odd levels. That's it, I think, for today's session. Wish you a successful trading day tomorrow. Thank you and have a nice evening. Bye bye.